There's an inherent problem with cryptocurrencies, and that is there is no clear framework of how to value an asset. When we look at stocks, we can see what's the dividend payments. When we look at property, we can see what's the rental income. But when we've got Bitcoin, there is no regular cash flow. So what's the fair value here? Crypto is a very abstract concept. It's just an entry in a database, in a decentralized database, the blockchain. How much is that entry really worth? Should Bitcoin be $1 or 1 million or 1 billion? What's really a fair valuation? Now, one way to approach this puzzle is to look at other asset classes. What is their market cap relative to Bitcoin? And here is an interesting overview. Bitcoin has a market cap of 2.4 trillion. This is very close to the market cap of silver. Bitcoin is already larger than Amazon and Facebook, but it's yet to flip Google, Apple, Microsoft and Nvidia. And gold is more than 10 times as large as Bitcoin. So even at 1 million per Bitcoin, Bitcoin would still be smaller than gold. Now the problem is that Bitcoin still gets traded as risk on asset. So when equities go down, then Bitcoin tends to follow as well. It's not yet getting traded in line with gold. So it's not really a hedge against the monetary system. This might change over time, but right now the comparison to other tech stocks, at least in terms of price development, makes more sense. Now let's have a look at a few of those relative valuations. So let's look at Bitcoin relative to Facebook. That's this long-term chart over here. At this point here at the end of 2017, Bitcoin was at 20K. And of course, Facebook also gained value, but Bitcoin was able to outperform by 85% since then. However, in the recent past, in the last 4 years, the two assets tended to trade somewhat in a range. Let's look at Bitcoin relative to Amazon. We get this chart. Again, since the end of 2017, we have seen Bitcoin outperform, this time by more than 100%. And it looks like Amazon did worse compared to Facebook in the last years. So Bitcoin continues to do better. Very slowly, very slightly, and there is of course a lot of volatility along the way, but still the adoption of Bitcoin has been faster than the business expansion of Amazon. Now let's have a look at the first precious metals comparison. Bitcoin and silver now has very similar market caps. 2.7 trillion versus 2.4 trillion. We just need to see a bit of a rally in Bitcoin and suddenly the market cap of Bitcoin will be larger. Now here is the relative valuation chart. And it very much does look like Bitcoin over the very long term will flip silver. Which does make sense because Bitcoin's supply expands much slower than silver's supply. Is Bitcoin even outperforming quicker or potentially slower? Your guess is as good as mine. But over the span of 2 years, it tends to outperform by roughly 63% or a bit under 30% per annum. So if that outperformance continues, 1 year from now, we might see the flippening. Now, the higher and higher we go on that list, the harder and harder it becomes for Bitcoin to long-term outperform. Because of course, Nvidia also grew massively with this run on AI. Let's continue with Google or Alphabet. Again, it does look like Bitcoin is the better long-term risk on asset. And while it's hard to estimate the exact long-term outperformance, the exact long-term growth rate, the trend is undeniable, as in the bottoms are higher and higher, and the medium-term tops also tend to trend higher over time. And so really, it seems like Bitcoin will be able to climb higher on those ranks over time, which makes sense. Because in the end, Bitcoin is a new form of money with a lot of utility. Maybe not necessarily for purchases day to day, but it is a hard money that's not inflating too much, that tends to at least keep its purchasing power, that can be transported easily, that can be transferred easily, and that cannot be confiscated. And all of those properties do have value in itself. And so really, silver, for example, should probably be worth less than Bitcoin. Yes, it does have industrial use, but it's a much weaker form of money. It should have much less of a monetary premium attached to it. The inflation is higher, it's very hard to transport, and it's not great for storage of larger amounts either. Let's look at Apple, Warren Buffett's favorite, who by the way called Bitcoin red poison squared. He wasn't really a fan of Bitcoin. Here is Bitcoin relative to Apple. You can already see how now those lines get less and less steep. Apple is growing at a very quick rate as well. And so the outperformance of Bitcoin to the top in 2017, when Bitcoin was at 20K, is only 28%. And one might argue that Apple might have been actually the better investment during that time because it was less volatile. Bitcoin, even though it did long-term outperform, also crashed by 80% in the meantime. Apple did not do that. So risk adjusted, Apple was probably the better bet during that time. Growing beyond Apple's market cap won't be that easy, at least if Apple continues to expand its business at the current rates. Here's Bitcoin relative to Microsoft. Again, a very similar picture. Again, Bitcoin barely outperformed Microsoft. Now, what about the tech juggernaut, Nvidia, that's at the center of the AI revolution that tended to appreciate very, very quickly? At what point in time might Bitcoin flip Nvidia's market cap? Right now, Nvidia is roughly double the size of Bitcoin. And in the early days, Nvidia did profit from the crypto run because of the GPUs. As in, Ethereum used to be a proof of work cryptocurrency. And so many people bought Nvidia GPUs to mine Ethereum. Ethereum now is proof of stake. So the demand from the crypto ecospace for Nvidia GPUs has come down. But now everybody buys the GPUs for AI applications. This is Bitcoin relative to Nvidia. This is a very long-term chart. It starts in 2014. And Nvidia stockholders got a very similar performance to Bitcoin holders. Isn't that fascinating? Sometimes Bitcoin outperforms, but sometimes Nvidia outperforms. And especially in the last 4 to 5 years, Nvidia was the much better investment compared to Bitcoin. Bitcoin would have to go all the way up here in the chart to flip Nvidia. Will that happen? Nobody knows. Historically, the average ratio of the two assets were this dotted line, which indicates a potential outperformance of Bitcoin of maybe 55%, if the two assets, of course, continue to trade in sync. And so isn't that fascinating? Bitcoin tends to grow very quickly, Nvidia tends to grow at the same rate. So if this just continues for long enough, then both assets are very likely going to be bigger than the entire gold market. Because here is Bitcoin relative to gold, and here we do see a clear appreciation. As in, Bitcoin tends to take more and more market share away from gold. But of course, we are very far away from a potential flip. The current rally in gold is mainly driven by central bank demand. So it's not just a small retail investor that's buying gold. It's the central banks that don't want to hold US treasuries anymore. Now, let's zoom out a bit further. Let's have a look at Bitcoin's performance relative to the Nasdaq 100. So when we look at all of the tech stocks, how is Bitcoin actually performing as another risk-on asset? That's this chart over here. So QQQ is a leading Nasdaq 100 ETF. Again, Bitcoin has its growth rate. We don't necessarily know exactly what that growth rate is, but really, Bitcoin is taking more and more market share. At least the outperformance is 64% over the span of 3 years. That's a bit under 20% compounded per annum. That Bitcoin is doing better than the technology stocks as a whole. It's not necessarily doing better than Nvidia, but it's doing better than the tech space as a whole. Here's Bitcoin relative to VOO. So this is the S&P 500. And here the growth rate is larger because the S&P 500 tends to do worse compared to tech stocks. Have a look at the Nasdaq 100 relative to the S&P 500. This is the long-term chart. We do have our .com bubble burst, but the long-term trend is quite clear. Tech stocks tend to do better than regular stocks. And Bitcoin tends to fulfill its promise, as in it does protect against monetary debasement. Bitcoin was launched at the height of the global financial crisis, when the monetary base got expanded massively, when banks got bailed out and the masses got diluted from their purchasing power. Bitcoin was created as a counterbalance to that. And Bitcoin relative to the US money supply continues to go up. And here the growth rate tends to be a bit more predictable. The tops aligned relatively well. The bottoms align relatively well. Those medium tops also align somewhat well. And so here, over the span of 3 years, we see Bitcoin outperforming monetary debasement by 146%. There's volatility, and we aren't necessarily at the bottom end of the trading range. There is risk. In the worst case, a drop of 67%. I'm not saying this happens tomorrow, but we have to be prepared. We have to be diversified. Long term though, if we hold Bitcoin for longer than a cycle, for 4 or 5 years, we tend to do better than just being in cash. And so really, for an investment, 5 years isn't really that much. People buy houses for 30 years. People hold stocks until retirement. 5 years of a holding period for an asset isn't really a problem. If you cannot wait 5 years for your investment to pay off, you might as well not invest. You might as well just keep your money in fiat, because then the inflation isn't really that much of a deal. Again, fiat currencies expand by roughly 6.8% per annum. The problem with the comparison to stocks, especially with the comparison to Nvidia, is that stocks historically are very, very expensive. This is the Shiller PE ratio, so the price to earnings ratio of all stocks, a very, very long-term chart. This starts in 1871. This year was the Great Depression. This was the dot-com bubble burst. This was the global financial crisis. And Bitcoin got created over here in January of 2009. Since Bitcoin's existence, risk on assets just went up. That's the potential danger. We don't really know how Bitcoin will react during a real crisis. Will it behave like gold, which would be great, but is unlikely? Or will it behave more like another risk-on asset, as it did during the COVID crash? During COVID, stocks went down by roughly 30% and Bitcoin went down by more than 50%. So if now stocks were to fall again by 50, 60, 70%, who knows what's going to happen with Bitcoin? It's the elephant in the room nobody wants to talk about. Here is the S&P 500 relative to the monetary base. This chart starts in 1959. You can see how the gains of the S&P 500 are pretty much 100% just monetary base expansion. If the Shiller PE ratio was at a more reasonable level of 25 or 20, then stocks would drop 50% from here, and they would be closer to the historical average price, right? This dotted line. Bitcoin started over here, and that's the big problem. We don't really know what happens once risk on assets contract again. And unfortunately, we are getting close to historical levels. In the PE ratio, we aren't yet at the absolute top. Again, this was the dot-com bubble, 44 PE ratio, but we are getting closer and closer. And in the end, this is what we do when we buy equity in a company. We are purchasing the future earnings, and currently the market cap relative to the future earnings is incredibly high. The future earnings are very, very expensive. And that's especially true for technology stocks, right? This is the Nasdaq 100 relative to the US money supply. It's already at an all-time high. Bitcoin was a phenomenal risk-on asset, as was Nvidia, but it seems like especially Nvidia now is expensive, and we don't know how Bitcoin will react during a real crisis. Not just a little bit of a corona dip, but a real correction in traditional finance. We don't know how this will flow over to the crypto markets. Now on this channel, I try to approach crypto differently to most other YouTubers. Most YouTubers, they just read the news or they try to find the next hidden gem that does a 100x return. But really, to survive in crypto long term, it's about compounding. It's not about finding the next 100x gem. It's simply about generating alpha consistently. So this is my personal trading performance compared to just dollar cost averaging into Bitcoin. So because I follow a fixed rule set on how to trade, I haven't necessarily made a 100x return with a random moonshot, but instead I simply just kept on growing the capital over time. Dollar cost averaging into BTC is this line in gray, by the way, and my portfolio is the line in black. And so I'm working on various back tests. I try to find out what kind of trading rules actually work. And this is the result of the back test. It's not my trading result, but it's based on an optimization of moving average durations and an optimization of leverage as well. So this is a linear scale. Here we've got the same on a logarithmic scale. So the Bitcoin price is in white and the backtested return is here, this line in turquoise. And there's two reasons why I like this. First of all, the drawdowns are less compared to buying and holding Bitcoin. So we've got less risk, but also the performance is much, much higher, right? Each of those horizontal lines is a 10x. So this was more than a 10x delta during the testing period. And so I set up a capital pool. I put in my own money as well, and any premium member can contribute towards that pool as well, and then hopefully get this return as well, right? We are following exactly this fixed rule set that made this backtest happen. We don't know if the things that worked in the past will still continue to work as well in the future, but it's our best bet, and I think it's superior to just following news or following the gut feel. So I'm in it with 150k. The start has been already quite positive, and of course what's behind the strategy is also explained in dedicated videos as well. And so I'm sharing 100% of my recipe, how I made outperformance in the past and how I hopefully will continue to make that. I'm also sharing every single trade. For example, over here, this was a relative valuation short. So this was move relative to Ethereum. We were betting on falling prices at the time. And then within 3 weeks, moved underperformed ETH by 8.5%. And again, we're not looking for the 100x returns. We're just looking for above average constant compounding. This is a marathon, not a sprint. I want to make the decision as easy as possible, so there is a 1 week money back guarantee. So in case you don't like what you see, in case you don't like the strategy, in case you don't like my trades, just message me within the first week and I refund you the $125, no questions asked. A link to premium should pop up directly here on the screen. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.